Get your home sold fast with our mortgage rate buy down. Everything you need to know. Let's talk about it. Hey everybody, my name is Brian, the home loan and real estate guy, and today I wanted to talk about our mortgage rate buy down program and how sellers, real estate agents and sellers can utilize seller paid closing costs to incentivize buyers to come check out their property and get their home sold fast. So if you're a home seller or you're a real estate agent, you're gonna wanna watch this video and take some notes because I have some really important information that I wanted to share to you, again, about how you can utilize the mortgage rate buy down to get your home sold fast. So let's talk about it. All right, I have a client who is actively out shopping and they came across a home that they like. It's priced at $735,000. It's been on the market for over 90 days. And the seller is giving $5,000 towards a mortgage rate buy down or closing costs. You can spend it however you want to spend it, okay? So my client came to me, I'm representing them on the loan side. My client came to me with their agent and said, hey, what can we use this $5,000 for? Affordability is a big issue with my client. He wants the lowest payment possible. So I said, well, we have a couple things that we can do. We can do what's called a permanent rate buy down, where we use that $5,000 to buy down the rate as low as we can get it with the $5,000 that's available. Or we can use what's called a mortgage rate buy down for the first year to get a really low interest rate for the first year and really low monthly payment. And then we talked about the possibility of the buyer's agent going and asking the seller for a little bit more money because the property has been for sale for over 90 days. They've had very little activity and no offers. So the buyer's thinking, hey, maybe I can get a little bit more money out of the seller. And if I do that, how can I utilize those funds for my best interest? So that's what I wanted to share with you. So let's just price this scenario out. And I wanted to tell you about this. So today I priced out this loan. Again, purchase price $735,000. The client has excellent credit and he's going to be putting down 10%, okay? His mortgage rate as of today is 6.625%. And that would give him a monthly principal and interest payment at $4,235. Now, if we utilize the $5,000 that the seller is giving towards a mortgage rate buy down, and this buy down would be for 1 year, the buyer could get an interest rate of 5.625%. So a whole percentage point lower than what he can get right now, okay, for the first year. And that payment would be reduced to $3,807. That would save our client principal and interest $428 a month for the first 12 months. After 12 months, the rate goes up to the 6.625 and his payment stays at $4,235 for years 2 through 29. So that's option number one. That is what we call our 1 year buy down program, okay, where we're buying the interest rate down for 1 year, 1 whole percentage point. Now, the buyer wants to go and ask the seller for more money. He's actually asking for $10,000 more, and some might think that that's unrealistic, but I'm going to tell you in this market, which is a buyer's market right now, it's not unrealistic at all. There's builders out there, new home construction, that are offering $20,000, $30,000, and $40,000 towards mortgage rate buy down and closing costs. So it's not out of the norm in a buyer's market for buyers to go and ask the seller for more money, especially when the property has been sitting for a while and had 0 offers. So let's run the scenario of if he gets this extra $10,000, now he'll have $15,000 towards this rate buy down. So what can he do? What options does he have? Well, option number one is he could do what's called a permanent buy down. He could take all $15,000 and use it to buy down the interest rate as low as it's going to go for the life of the loan, the full 30 years. So if he did that, he could take his rate from right now from 6.625 down to 5.875, and this would save him $322 a month principal and interest for the life of the loan. That's huge, massive savings. His second option is to do what's called a 2-1 buy down. where the interest rate is 2% lower for the first year. So it's currently 6.625. It would get reduced to 4.625 for the first year. And then year 2, it would go up to 5.625. And then year 3 through 30, it would be at 6.625%. So if he did this the first year, he would save $834 every month for the first 12 months. And then in year 2, his savings would be $428 for months 12 through 24. And then for year 3 through 30, it would go back up to his regular payment of $42.35. So depending on the client, the buyer, and depending on what they want to do, how long they're going to be in the property, and then depending on the advice that we give, because we do know things about the market and we try to educate our clients, our buyer has many options to explore. He can do a temporary buy down or a permanent buy down. The temporary buy down is going to get him more savings for a shorter period of time, where the longer term permanent buy down is going to be less savings but spread out over a longer period of time. So again, it just depends on what the buyer wants to do and what their comfort level is. Now, I will tell you, being in the business for 20 years, I probably wouldn't spend $15,000 to just buy my rate down to 5.875%. Mortgage rates have been trending lower over the last several months. We've seen a recent uptick in mortgage rates over the last 15 to 20 days, but overall they have been trending lower. And it's highly likely that they're going to continue to trend lower into the second half of the year and into next year. So if I was going to get $15,000, I would probably utilize it towards a 1 or 2 year buy down, and then any remaining money I would utilize towards paying my closing cost, knowing that as mortgage rates move lower, I'm going to have the ability to refinance that debt at a much lower rate and much lower payment. So again, I would be focused in this environment on trying to use some of the money towards a temporary buy down and then the remaining money towards paying for my closing costs. So I do see the initial savings for the first year to 2 years, and then I can keep some money in my pocket and in my savings account, knowing again that mortgage rates are trending lower and I'm going to be able to refinance. So I just wanted to put this video together and let real estate agents know, let sellers know that if you have a property that has been sitting in this market, you want to strategize. You don't necessarily need to lower the price, but you can give a little bit more in credits to incentivize buyers to come take a look at your property and incentivize them with a lower payment. Affordability is the biggest thing on buyers' minds right now. How do we afford this property? Can we do it in this economy where inflation is still running hot and unemployment is rising, right? So this is what is on the minds of buyers. So knowing that, sellers and agents need to adjust their thinking, need to adjust their strategy in order to entice buyers to come check out their property and get their property sold quick. So I just wanted to share this information. Again, I am Brian, the home loan and real estate guy, your one-stop shop for all things real estate. Doesn't matter if you're a real estate agent, if you're a seller, if you ever need me, even though I sell real estate, please reach out. I would love to work with you and love to help you get your house sold. And sellers, same thing. If you have questions, if you want to figure out how we can get your property sold, please don't hesitate to reach out. I'm always available and here to help you guys. Take care, everybody. Bye.